Good evening, Chicago, and welcome to In the Money. I'm your host, Tamara Dervin. Warren Buffett once said, "Do not save what is left after spending, but spend what is left after saving." And while that's about discipline, the truth is discipline shows up in our credit too. Because let's be real, so much has been said about credit, what it is, what you need it for, how to build it, how to fix it. But for a lot of us, it still feels confusing, overwhelming, or even frustrating. And if we're honest, we often treat our credit like an afterthought until we need it. And then we find ourselves wishing we had made different financial decisions so our credit would be in a better place today. Here's what I want you to know. Credit is not just a number. It's a tool. It's one of the currencies of our financial world. And whether we like it or not, it impacts what we pay for the things that we need, like housing, transportation, insurance, or even opportunities. Good credit isn't just nice to have, it's an asset. But with that comes responsibility. It means being informed. It means making intentional financial decisions every single day. So, in this episode, we're not talking about schemes or shortcuts. We're going straight to the source. We're breaking down what credit really is, how your score is calculated, how to build it, how to recover it, the pitfalls to avoid, and yes, how to actually use credit to your advantage. Because this is about more than credit. This is about confidence, clarity, and control over your financial life. So grab your notebooks or open your notes app because this conversation can change the way you think about your money. On the other side of the break, Tracy Anderson, principal with TransUnion, joins me to break down credit fundamentals and talk about real, practical ways to help you recover and rebuild your credit if you're trying to get back on track. Stay with us.
They say television is about sitting back. We say it's about stepping up. Your block has stories worth telling. Your neighbors have voices worth hearing. Chicago has a heartbeat worth sharing. Stop watching their world. Start showing yours. It's time to tune in and be seen. Can TV, always here, always yours. Experience the power of community television.
Welcome back. My first guest is Tracy Anderson, principal with TransUnion Financial Inclusion Center of Excellence for U.S. Markets. Welcome to In the Money, Tracy.
Thank you for having me. I'm so excited to be here.
Thank you for agreeing to do this. I know you kind of talked about, you can maybe share with our viewers why, we know where you work, TransUnion, of course, but why it was kind of important for you to come share with us about credit, like your passion for credit.
Thank you. I've been at TransUnion for a decade, and I've seen that growth from a credit bureau to an insights and information company. And prior to that, I was at one of the biggest banks in the world, HSBC, in consumer lending. So I have 20 years of experience in this space, and I know credit can be complicated. And I'm here to talk to you about how to make it plain.
That's good. That's good. And that's what our viewers want. They want us to make this topic plain. So let's start here, because we know sometimes credit can feel intimidating because we need it, but you know, sometimes it's not in the best position when we need it. In simple terms, explain to our viewers what is credit and what is a credit score and why should we care about it in our everyday lives?
Absolutely. Think about credit scores as a grade. So think back to your school or high school grade card. It is a indicator of how well you manage to borrow money. And it's really important because it manages if you get access to credit, how much you would pay for credit, including home loans, auto loans. It can impact how much you pay for insurance.
Yeah.
It can also impact the deposit you pay on a rental property. So if you want to rent an apartment, your credit score can impact how much you have to put down for that rental property. So it's really important.
What are the main things that people should focus on if they want to, let's say their credit is not in the best place, let's say they need to improve their credit. What are some of the things that they should start doing?
I believe that starting with knowledge, so listening to your show, that's where you get the knowledge, and knowledge is power. And then putting that knowledge into practice so you have good credit habits. One of the things that is top and most foremost and goes into your credit score is your payment history. And so you need to make sure that you are putting processes in place, that you are paying each of your bills on time. And that may mean automating your payments, or at least having a budget and a schedule so you know when your bills are due and you can pay them on time. Another one is utilization. That is the second most important factor in most credit scores. And utilization is really how much of your available balance you're using. But again, practice is important. So you need to understand. You need to know what is your limit so you can calculate what is 30% of that. So oftentimes people may hear the tips, but they don't put them into practice. And so again, figure out what your limits are. Know what 30% is and try to keep your spending below that, because that helps your capacity for credit look positive, and that's going to help increase or maintain your credit score.
Now this can be maybe a little controversial, but because of where you work, I want you to share your thoughts on services that promise and really charge people to actually fix their credit. You know, we have these, we can fix your credit service. I want you to kind of share your thoughts on that.
Well, you can tell by my reaction,
Yes.
I have strong feelings about that. But at the end of the day, I want everyone, all of your viewers to know that credit is a long game. So there are no immediate hacks or fix. But what you can do is monitor your credit. You need to ensure that you understand where you are, what your credit history contains, and what your current score is. Oftentimes, your financial institution will have a tool available to you through their app or through their website. But if they don't, or if you're, credit invisible, if you haven't, if you don't have a banking relationship, you can always go to transunion.com Credit Essentials, and there, without putting in a credit card, you can get your credit history, get your credit report, and get your TransUnion credit score. So again, that's a starting place for free without having to put in a credit card, and that's a start, because you have to know where you are so that you can, if you do ever engage a counselor, and again, that's not someone fixing your credit, but if someone's going to help you, you want to know your starting place. I don't recommend any quick fixes, because that's just not how credit is built. Credit is built over time, so you really need to be, as you pointed out, you need to be paying attention to your history from the day you start building credit and continue to monitor it.
So if someone hasn't started building their credit, what is 2 to 3 simple steps they can take right now to actually start to build their credit?
Sure. So oftentimes, from an industry perspective, we may consider that new to credit. And essentially what you need to do is, one, check and see if you have credit history, because that's something that you may not realize, but unfortunately sometimes you can have credit opened in your name. So you need to check and make sure. And then once you have either your first credit card or your first auto loan, then you need to make sure that you're putting those habits in place. So you have to have those practice good habits so that your score can be start strong and stay strong. And those habits include, as we discussed, having a good practice of paying your bills on time, knowing where you are with your balances compared to your limits, and keeping those down and paying those on time. And then also making sure that you understand the history of how much credit you have. So even in the beginning, you may open 2 or 3 cards, and as your credit grows, you'll get access to better credit cards or better loans. And with those credit cards, sometimes if I know you're a traveler like me, sometimes if you get to a travel card, a card that gives you points for travel, don't close that first credit card because the length of your credit is really important.
Okay.
So you want to make sure that you have as credit history as long as possible. So even if you don't use some of those early credit cards as often, don't close them, because when you're looking at your credit history and when your score is calculated, your length of history, how long you've been practicing good credit behavior is important.
I'm glad you said that, because sometimes when people are trying to get out of debt and stay out of debt, they'll cut up the card, don't use it, and then either the credit card company will close it because of non-activity, and you've had this credit history for so long. And so it's important to keep that active and open, not going into debt, but keeping it active and open. So I'm glad that you mentioned that. Are there any credit hacks or smart strategies that people can use to give their score a boost over time?
There's a couple of things I want to think about in this space. One is, don't believe the myths that are out there. Checking your credit is always important, because that is, again, where you know your starting point. Also, make sure that you're reporting different payments that you're making. Make sure that, for example, if you're a renter today, there's a great opportunity for you to have your rent reported to the credit bureaus, because that oftentimes is your biggest expense if you're not a homeowner, and you want to demonstrate, because again, a score is your ability to pay a debt obligation. And if you sign a lease on an apartment, then that's a debt obligation. So having your rent reported to the credit bureaus is a way to demonstrate that can improve your score.
Thank you so much, Tracy, for sharing your wisdom and your tips with our viewers. I know that they were empowered related to their credit today. So thank you so much for joining us today.
Thank you.
After a quick break, I'll be joined by Jasmine Lopez, accredited financial counselor. In the Money continues on the other side of a short break. Stay with us.
Got something to say about Chicago? Now's your chance to be heard. Chicago Newsroom 2.0 is launching Opinion, a new segment where everyday Chicagoans take the mic. Whether it's a neighborhood issue that's been ignored, a citywide concern that needs attention, or a fresh idea that could change our city, we want to hear from you. Submit your commentary at cantv.org/opinion. If selected, we'll invite you on air to share your perspective with all of Chicago. Experience the power of community television.
Joining the conversation now is Jasmine Lopez, accredited financial counselor with Mentally Mutual. Welcome to In the Money, Jasmine.
Thank you so much for having me here. This is a full circle moment.
Yes. So if you could tell our viewers a little bit about your journey with credit, and maybe, you could talk a little bit about your full circle moment as it relates to me.
Yes, absolutely. So, back during the mortgage crisis around 2010, my husband and I actually lost our home, our car, and our possessions. We experienced bankruptcy and had to rebuild our credit and figure out what does it look like to live intentionally and well. And part of that journey brought us to one of your workshops. I think it was like 2014,
I remember that.
and where we got to learn about budgeting and saving and really creating a plan around what it looks like to rebuild.
Yeah, and so I'm glad that our viewers can have that connection point with you, because if someone feels that they're in that current place right now, they can look at you to see, as you talk today about a little bit some of your tips and where you are now.
Yeah.
Now you're helping people with money, becoming an actual accredited financial counselor. So I'm glad that people can see that you can go from that to actually thriving financially. Yeah. We talked about credit in our previous segment, but now let's talk a little bit about using our credit. What does it look like to actually use your credit wisely in real life?
Yeah, I think the first question is, am I ready to use it?
That's
and
good.
then if you are, then how do I utilize it in a way that's best for me and what my goals and intentions are? And then be able to make sure that I am spending less than I'm earning, and then that way it allows for me to utilize credit but paying it off fully before the statement date.
Let's talk a little bit about what are some real life benefits of having good credit that people might not even realize.
Well, credit can determine so many things. It can determine our like mortgage rate, insurance, ability to get an apartment, even a cell phone, and so much more. And so building it wisely and intentionally, I think, is so important.
Is there a simple rule you recommend? And we kind of have talked about this, like with paying it off, but is there a simple rule you recommend so people enjoy the benefits but avoid the debt?
Yes, absolutely. So first you want to make sure that you're, keeping it under that 10% range, and then making sure
when
that
you say 10% of what?
10% of your credit utilization.
Gotcha.
And then you want to be able to pay it off before the statement date or by the statement date. I like to give myself enough wiggle room where I pay my balance off in full every week. So the second my paycheck comes in, I pay that credit card off in full every single Friday. And that way I'm not worrying about the statement date so much.
If someone has a credit card right now, what are 2 to 3 habits they should start immediately to use it responsibly?
Yes. So first is assessing, am I living within my means? Am I spending less than what am I spending less than what I'm earning? Taking that honest assessment, because paying off the card before the statement date is so important. So I would definitely say do an assessment on that. Check your balances, see if you're spending less than what you're earning. If you're not, then you'll need to make some shifts around how you can increase income and different things like that. Then it's identifying, okay, if I'm not if I am spending more than I should be, then I need to figure out how to cut those expenses and identify what is the why kind of behind it. Is it that I'm kind of like spending out of overconsumption, different things like that, or maybe we're under earning and we need to increase our income to be able to then be able to ensure that we're not spending more than we're earning right now.
And just one last point, I want you to speak to viewers that, or give viewers a tip to avoid temptation with credit cards, because once you have this limit, what's one tip to help to our viewers to avoid temptation with overspending when you have available limit on your credit card?
Yeah, absolutely. I think you should have a plan. If you're looking to treat yourself to something fun and joyful, because I think money should be joyful, make the plan for how you're going to purchase that first before you just charge it, because you need a plan for how you're going to pay for it, not how you're going to pay for it after you've spent it.
Thank you so much, Jasmine. This has been an amazing conversation. I know that our viewers are empowered by your story and also what you're doing now to help others empower them financially. So thank you for joining us on In the Money today.
Thank you.
Money Matters with Old National Bank's Ben Jergens returns on the other side of the break. Stay with us.
CAN TV is the lens through which Chicago's stories are told, harnessing the unifying power of community television. With CAN TV On Demand, immerse yourself in the richness of our city through exclusive stories and programs tailored just for you, connecting you to the heartbeats of our streets, the voices of our people, and the spirit that makes Chicago unique. Discover the strength of your community on CAN TV On Demand.
On this week's Money Matters, Ben helps us understand what a FICO score is, what gets reported, and how to build strong credit using a credit card without going into debt, using a familiar high school grades analogy and practical low-cost steps.
Credit impacts more parts of life than it used to. Sometimes housing, car buying, insurance rates, and even getting utilities turned on. So it's worth understanding how the score is actually made. If you've ever looked at your credit score and thought, why did it drop? You're not alone, and it's not always about how hard you're working. Most people understand grades. You don't feel your GPA, you earn it based on what gets written down. Attendance, homework, quizzes, and tests. Your FICO score works the same way. It's a weighted average based on what lenders report. In the next few minutes, I'll show you the main grading categories, what actually gets reported, and how to use a credit card to build credit without paying interest. Think of your FICO score like a report card. Some categories count a lot more than others. Number 1, payment history. The final exam, about 35%. This is the biggest piece of the grade. Late payments are like failing the final. They do the most damage, and the best way to move is to pay at least the minimum on time every month. Number 2, credit card balances or utilization, your major test, about 30% of the grade. These are the big tests along the way, and if a card is near its limit, it can pull down your score even if you pay it on time. I want you to aim to keep the balance that gets reported compared to the limit. Length of credit history, your quizzes, which is about 15% of the grade. Quizzes don't usually make or break you a loan, but over time they do add up. A longer history can help, so think twice before closing older accounts that you're managing well. Number 4, new credit or inquiries. This is your attendance, about 10% of your grade. Attendance is about how often that you show up or apply for new credit. If you're applying for several credit cards or loans in a short period of time, it can look like financial stress, so your score can dip temporarily. Steady and spaced out is better than a sudden burst. 5, credit mix or homework, which is about 10% of your grade. Homework helps round out the grade, but it's not the main thing. In credit, having a mix like a credit card and maybe an installment loan can help a little over time. But please don't take on debt or open accounts you don't need just to chase points. Now let's talk about what gets reported. Quick truth, a lot of bills that families pay every month, like rent, light, gas, phone, and internet, usually don't get reported to help your score. But if they do go unpaid long enough and get sent to collections, that can show up and hurt your credit. Now it's important to remember, the credit bureaus don't track your daily spending. Credit card companies usually report your balance around your statement date. So think of it like a teacher posting your grade at the end of the grading period. So if your balance is high on the statement date, even if you pay it off by the due date, that higher balance may be what gets reported, and it can temporarily lower your score. If you're able to pay the card down before the statement closes and keep the reported balance lower. Build credit without going into debt. A credit card can be a great credit building tool, but you don't have to carry a balance to build credit. Interest is optional if you pay it the right way. Simple credit building plan. Use the card for one small bill that you already pay every month. Could be transit, gas, or a phone bill. And then set auto pay to pay the full statement balance each month. That builds on-time history and avoids interest. And if you remember one thing, remember this. Your score is a weighted average of what gets reported. Pay on time, keep the reported balance low, and use credit like a tool, not a trap. And one quick safety rule. If money is tight for essentials, focus on food, housing, and utilities first. Don't rely on a card to float the month. Build credit in small, controlled steps.
Thanks, Ben. I hope our viewers were taking notes because you gave some really good practical tips and actual good credit information to help them rebuild or even boost their credit score. So those analogies about, I never even thought about that, high school grades, GPA, breaking it down that way, because we all know about, doing our homework, tests, to make sure that our GPA was high. So maybe they'll use those things to make sure that their credit stays high.
That's our goal, is to relate to something that we're familiar with and apply it to a principle we may not be.
So, we have to end with the dad joke.
Of course.
And today's word is going to be credit.
Well, it's good because I've had issues with credit in the past. I actually had a credit card stolen once, Tamara, and it took me a while to report it. And the cop finally goes, "Well, why are you just now reporting this?" And I said, "Well, the thief was spending less than my wife." And he's like, "Well, why are you reporting it now?" And he said, "Well, I think the thief's wife got a hold of the credit card now." So.
Okay, thanks, Ben. On the other side of the break, this week's money moment. Stay with us.
Got something to say about Chicago? Now's your chance to be heard. Chicago Newsroom 2.0 is launching Opinion, a new segment where everyday Chicagoans take the mic. Whether it's a neighborhood issue that's been ignored, a citywide concern that needs attention, or a fresh idea that could change our city, we want to hear from you. Submit your commentary at cantv.org/opinion. If selected, we'll invite you on air to share your perspective with all of Chicago. Experience the power of community television.
The Book of Wisdom reminds us, a good name is more desirable than great riches. And when you think about it, your credit is your name. It's your financial reputation. It tells the story of how you manage and repay what you've been given. And that name, it has value because your credit impacts your budget in real life. For some of us, it's the reason we feel we don't have room to save or invest because we're paying more for the things we need, like housing, transportation, and insurance. And many times we're paying more not because of what we bought, but because of the terms tied to our credit. But here's the truth. Having good credit requires sacrifice. It means living within your means. It means saying, not right now, so you can say yes later. But the reward, it's worth it. Because two people can walk into the same dealership and walk out with two very different deals. Not because of what they chose, but because of their credit. And I'll be honest, I've been on both sides of that. There was a time when my credit wasn't where it needed to be. And every time we applied for something, there was uncertainty. Will we get approved? What will the terms be? And I didn't realize then it didn't have to be that way. But fast forward to making intentional decisions, being disciplined, and staying focused. The last time I walked into a dealership, I walked in with confidence. I knew my options. I knew my power. I was in control. And not only that, now I have access to credit cards with great terms and rewards. I'm able to use those cards to my advantage, earning cash back, traveling sometimes for free, and even checking off a few Christmas gifts using points and miles. And the difference is, I'm doing it without carrying debt. That's the shift. That's what happens when you move from using credit out of necessity to using it strategically. And that's what I want from you. For no matter where you are on your credit journey, you are not stuck. Nothing is too far gone. But it will take discipline, it will take consistency, and it will take a commitment to doing it the right way. No shortcuts, no scams. Here are your action steps from today's episode. Number 1, know where you stand. Review your credit regularly. Determine what needs improvement or to be changed. Use trusted tools to monitor your score and pull your free credit report each year using the free resources on the TransUnion website and annualcreditreport.com. Number 2, reduce the weight of debt. If you're carrying consumer debt, make a plan to pay it down. That's one of the fastest ways to begin improving your credit. Number 3, use credit with intention. Explore your credit card benefits, but stick to your budget. Let your credit work for you, not against you. Because at the end of the day, this isn't just about your credit score. It's about your confidence, your options, and your financial future. And a good name gives you options, and that's something worth building. Next week, we'll tackle taxes and debt, and Ben Juergens returns with a new installment of Money Matters. In the meantime, if you have any questions about today's topic or any financial question, send them to me. Email me at tamara@moneybasicsonline.com or follow me on Instagram at IamMoneyBasics. Also follow my guests on social media. I would love to keep this conversation going, so let's connect. Remember, we are on this journey together to get, stay, and grow in the money. See you next time.